Trading strategies with high win rates are always popular. So, in this video, I'm going to demonstrate a simple trading strategy tested across 5 different markets, all with winning percentages between 79 and 86%. It works off of the daily charts and on average stays in trades about 3 days. We won't be needing any indicators, so we don't look at any indicators. We're just going to be looking at one bar for the setup. And even though I'm going to show you the exact setups for the 5 different markets, the purpose of this video mainly is to demonstrate how to find these high probability or high win rate setups if that's the type of trader you are. Shortly we'll go to the computer and we'll see trade reports from over 13 years worth of data on each of the 5 markets. But first we go over to the whiteboard where I'll show you the trade setup and the exit. The entries for this strategy works because of 2 main principles. The first, if we're looking for buy trades or long trades, we're going to enter after we've seen a short-term dip, and when we're looking for short sell trades, we're looking to enter after a bit of a rally. So we're looking to enter the market at a decent price. And principle number 2 is we're only going to take trades on certain days of the week. If you look over the years, and I produce studies looking at this, you'll notice that most markets do have a bias and they tend to either rally or decline on certain days of the week, time after time. And this is also true for days of the month too, but we're not going to cover days of the month in this video. We're just going to be talking about certain days of the week. As an example, let's say that euro dollar has a tendency to rally on a Wednesday. Then wouldn't it make sense if we saw a down day or a big dip on Monday or Tuesday, it would make sense to then buy it, stacking the odds in our favour of making money on that trade. That's not the exact rules, that's just an example, but that's the principle behind this strategy. I've mentioned we're going to be looking at 5 different markets, and the daily setup bar is always going to stay the same. However, the day of the week for each individual market will change, but I'll show you those when we look at the computer and look at the charts. Firstly, let me explain that daily bar as the setup. And we're going to be doing the opposite for short as it is for longs. So I mentioned we're looking at a daily chart. Let's look at this bar here. So this is a daily bar, and pay close attention to the range. So as an example, I've put on some prices from the low to the high. We're going to be using 100 and 200. Obviously, Forex prices are nothing like that, but to make it really easy for this example, that's what we're going to use. So what we want to see for a setup to buy or to go long, we want to see the closing price, which is here. We want to see it in the very lower 20% of that daily range. So let's say that the low was 100 and the high was 200. So we had a range there of 100 pips. So if this closed at 115, then that closed within that lower 15% of the range, or it closed at 15% of that range. If it was to close at 119, we'd still take the trade. If it was to close at 125, then it would be above that lower 20%. Okay, so we're looking for a close that's in the lower 20% of the range. If we're going to use it for a short sell setup, we want to see this close in the upper 20% of that range. Okay, now it's easy for me to say because I use multi-charts, which is a trading and testing platform. So once these rules are programmed, then the software will just scan the markets and take the trades as they come along. If you're not using software and if you're trading manually, then you are going to have to work this out manually. However, you are going to get a good idea just by eyeballing the chart. If you see a close that's midway, you know that that's not going to be either a short sell setup or a buy setup. So the minute you see something that looks in the lower 20% or looks in the upper 20%, then maybe break out the calculator and work out, are we in that range to take the setup? Okay, so that's the daily bar setup. Now here's where things get interesting. When I was programming this, I was programming it on an intraday chart and I made a slight slip up. What I actually meant to do was use this setup bar as the previous day, or actually as the same day. So if we saw a close in the lower 20%, then as soon as the market closed, I wanted to enter at the next open. That was the idea. However, I made a slight slip up when I was programming it, and I actually programmed it as the prior day. The first market I tested it on, it seemed to work quite well. And then I realised what I'd done, very easy to correct, but it actually worked quite well. So I thought, oh, let's just run with it. So what we're actually looking for is, if you can see these three bars here, if we just concentrate on the middle bar and concentrate on the close of that middle bar, that's what we're looking at. Every time we see the market close, we look at the bar prior to that, okay? So the market's closed here. We don't even care what this bar has done. We're just looking at the previous bar, and that is the setup bar. That is this bar. So in this example, this was our close in the lower 20% of the range, and then what we do is we immediately go long on the open of the next bar. So setup bar, this first one, and then we're going to buy on the open of the next bar. So if you're manually trading this, on the closing of each bar, look at the previous bar, not the one that's just closed, the previous one, because that's going to be your setup bar. Now, that's the setup, and the next part to the strategy is the day of the week, and I'm going to show you which day of the week for which market. However, this is where you have to be slightly mindful as well. By the way, all of these are based on Eastern Standard Times. If you can set up your charts to have 5 daily bars per week using Eastern Standard Time. And the closing price is around 1700 Eastern Standard Time. Now, this middle bar, this is when we're looking for the trade. This is what the close of this middle bar is what my software is actually looking at. So if I say only take trades on a Monday, and this bar here happened to be, or the close happened to be on a Monday, then I could take the trade. I would enter immediately at the open of the next bar, which would still be Monday, okay? Because the session start and end is obviously on the same day, apart from on a Friday. So if I was to say only take this trade on a Friday, what it would mean was we've closed the market on the Friday and we're going to enter long on the next open. Now normally the next open would be either a minute later or 5 minutes later, 15 minutes later, depending on your broker. However, if this bar is a Friday, then the open is going to be on Sunday, okay? So if it's a Monday, Tuesday, Wednesday, Thursday, we're going to be entering pretty much immediately. But if it's a Friday, then we have to wait until the Sunday to enter. Now the exit, I promise you, is very simple. We're going to use our bailout exit, or our first profitable close. Literally, all we do, we look at the close of every bar when we're in a trade, and if we're in profit, we exit the trade. If we're not in profit, we leave the trade open. And we're either going to exit in profit or we're going to hit our stop loss. And we're going to use a fixed pip stop loss for each market. Each market is going to be slightly different. I'm going to tell you what it's going to be. So I hope I haven't confused you too much. Let's go and have a look at the results, and I'll show you some trade setup examples on the charts. The data range that we're using is from January 2008 through to just the start of October, which is around about the present day. This is a chart of USD versus the Canadian dollar, and this is a good example of a trade here. So this bar here was the setup. So on the closing price of this bar, where my little hand is, we're going to look at the previous bar, which is this bar. Now, was the close in the bottom 20% of the range? And yeah, I mean, we don't even need to get the calculator out to realise that that really did close right down the bottom of the range. So the minute that happens, is it on a Thursday for this strategy? So is it a Thursday? Yes, it's a Thursday. So then we enter on the open of the next bar, which will still be a Thursday because it'll only be a few moments later. So there's a little blue arrow where my hand is, if you can see that. So we've entered there, and then the minute we're in a trade, we're looking for the exit. So on the close of each bar, we're looking, are we in profit or are we not? So the close of this bar, we were in profit because the price had rallied. And once we see that, we literally exit on the open of the next bar. Now you'll notice there was a bit of a gap there. That's because this bar here was on a Friday and we're exiting on the open, which happens to be a Sunday. So we're going to get that little weekend gap. Okay, so that's a good example of a long setup. Just a quick one I will mention as well. Each and every one of these strategies I have actually added 3 pips worth of trading costs or spread, so they are including some trading costs too. Each of the 5 strategies either goes long or it goes short. Now I mentioned most markets do have a bias to either rally or decline strongly on certain days of the week. However, I have found that the most profitable setups for these markets happen to be either of the long or the short. I didn't really find any that had a strong setup to go both long and short, but I'll walk you through and tell you which ones are which. So let's start with this, which is US dollar versus the Japanese yen. And straight away you can see we're only taking short trades. And just by looking at my inputs up here, I can see we're only taking short trades if the day was a Friday, and we're using a 250 pip stop loss. So let's have a look at the performance report. There's the equity curve, which is quite nice. That's the close to close equity curve. Green dots show new highs in the equity. And total trade analysis, we can see we got a percent profitable of just over 86%. Average trade of 11.4 pips or 11,400 yen. Okay, so let's move on to the next one. Let's look at US dollar, Canadian dollar, which we just looked at, and we know that it's a long only strategy. We're going long on a Thursday and we're using a 200 pip stop loss. This one is 79.6% profitable, average trade of 195 Canadian dollars, and the equity curve looks a little like that. So consistent behavior throughout that almost 14 years of data. This one is euro dollar. We can see it's a long only, and looking at my inputs, we're going long only on a Friday with 150 pip stop loss. Equity curve looks like that. Not quite as nice as some of the others, but still moving in the upward direction over those years. We've got an accuracy of just over 80%, average trade just over $100. Before I show you the last two markets, if you enjoy and you like this type of mechanical trading strategy, then make sure you grab my new Beat the Markets strategy guidebook. And if you use the link that I've put below, you can get it for 100% free. It includes 3 mechanical, rule-based or algorithmic strategies, and they're 3 of you, the viewers' favourite strategies. And if you're enjoying this video, please give it a thumbs up and maybe subscribe if you want to see more like this one. We've got Australian dollar versus the US dollar. We can see that it's a short-only strategy, and we're only going short on a Monday, and we've got a 200 pip stop loss. We've got accuracy now, or percent profitable, at 84%, $119 average trade, and the equity curve looks a little like that, so that's pretty good too. And the last one we're going to look at is euro versus the New Zealand dollar, and you can see this is a long only strategy, so we're only looking for buy trades, and we're only going to take that trade on a Friday, and we're using a 250 pip stop loss on this one. There's the equity curve, and the percent profitable, 79%, average trade quite large at $258. Creating high accuracy trading strategies isn't just about the entries. Using that first profitable close exit helps a lot too. That daily bar setup was just a quick idea that I came up with, and I thought I'd combine it with the trading day of the week bias to stack the conditions or stack the odds in the favour of the strategy of coming up with a good entry, and then using that first profitable close just kind of rounded it off. But there are so many individual and even multi-bar setups that you can use to find these sort of entries, some of which will actually produce some reasonable and quite surprising results. I always encourage you to test your own ideas out too. Have you already found some decent strategies like this? What is your favourite bar setup? Leave it in the comments and maybe I'll have a look at that and maybe even try and improve it for you. Well, I hope you've enjoyed and possibly learnt something from this video. Please don't forget to hit the thumbs up button, and don't forget, if you want that strategy guidebook for free, use the link down below. Anyway, until the next one, this is Jared Goodwin, and thank you.